the Market Musings Podcast. Well, welcome back to the Market Musings Podcast here from Stopbox, where Rick Rule is joining us again. Rick, thank you so much for giving us your time. How have you been?
I've been very well. Thank you for giving me the opportunity.
It's always good to be speaking to you. I think this is maybe the third time that we're talking. I'm hoping to see you again in person, perhaps at the Minds and Money Resourcing Tomorrow show at Christmas time in London. But I do want to get a bit of a feel for what life has been like for you after the Symposium, which was only a few weeks ago, wasn't it? How did it go?
Well, I think I'm really still basking in the glow of the conference. We had over 600 live paid attendees and over 1,400 paid live stream attendees, and we've sold over 100 copies of the conference recordings post-conference.
Okay.
So it was very well attended. In fact, the largest attendance in the history of the conference, going back about 30 years. In addition to the stats, I think we did a great job at the conference. The speakers were extremely well received. As you know, we have an unconditional money-back guarantee. Should any of the attendees feel that they didn't get their money's worth, they can get a full refund. With over 2,000 attendees, I'm delighted to say that we've had two refund requests.
Okay.
Which tells me that we made our attendees happy and hopefully wealthy.
Well, 2 out of 2,000, yeah, that's not bad going, is it? Hey, so that's a good result. What were the key? Have you got any key takeaways that stood out to you from that event? Whether it's, I don't know, commodities that stood out, or something that someone said to you, or discussions on panels.
Well, there was a lot. You know, we try to have macro panels and macro speakers that are different than at other conferences, as opposed to having journalists or influencers. We try to have current or former players. So we had David Stockman, who was the head of the Office of Management and Budget in the Reagan years, talking about Trump's big, beautiful bill and America's deficit. And to say he was scathing was an understatement. On the other side, we had Jim Rickards, who was lead counsel for long-term capital management. When they went broke, they almost took down Wall Street. Mr. Rickards, in addition to being general counsel for long-term capital management, was employed by the CIA, an extremely bright and extremely well-connected guy. He thinks that Trump's tariffs and Trump's economic policies are going to work. He thinks dullards like me just don't understand it. Time will tell if he's right.
Yeah, indeed.
We had Daniela DiMartino Booth, talking about the Fed as a Fed researcher, and talking about the challenges in front of the Fed and the fact that the Fed believes itself to be the only agent of the U.S. government that stands against the debasement of the U.S. dollar, sometimes unsuccessfully. The removal of Powell should occur, and the agencies caving to Trump and artificially lowering interest rates, I believe would be disastrous for America. But I think it would be wonderful for me in the sense that would represent capitulation by U.S. society in terms of the U.S. dollar. And I suspect would engender the type of rush in gold that we saw the last time that policy was attempted, which was in 1975.
Yeah.
So I would say there was a mixed macro message. It wasn't all doom and gloom, by the way. I don't like a monolithic rhetoric from a conference. And so we had Joel Littman, who said, actually, the debt is serviceable, that the U.S. will collect 50% of the taxes collected worldwide, and we have nowhere near 50% of the debt. He talked about the fact that of the mega companies that have come into existence in the last 25 years, virtually all of them are American. And he believes it's virtually certain for the next 10 years that the U.S. will repeat that. He believes that the economy will be stronger than other people believe, and he believes that the track record, as a consequence of the margins enjoyed by technology companies, will make our current fiscal situation manageable. I happen to disagree with that.
Okay.
but I wanted that point of view to be available to my attendees. I do believe that if you look at the whole set of circumstances in front of, frankly, the entire world, not just the United States, too many people use dire forecasts as an excuse to quit.
Mm.
Roll up in the corner in fetal condition and whimper. And I think it's important that you look at the circumstances in front of you, you take note of them, and then you do what you can to ameliorate them. A long-term speaker at my conference, Robert Friedland, one of the great mining entrepreneurs in history, once amused my audience by following a macro panel saying, "What you've heard is true. The situation is hopeless, but it need not be serious for you." And that's the message that we tried to leave
Right. Yeah.
with regard to
Okay.
macro.
It's interesting. You got that other angle there, and that you effectively disagree with it. That the United States will carry on. It will be the world's biggest superpower. It will manage to service its debt there, and it is an interesting angle because we hear a lot of those kind of more doom and gloom headlines. YouTube about things sort of crashing. The world's going to end, and it's quite a nice thing to sort of talk about and speculate about and perhaps bet on, but people have been sort of doing that for quite a long time, and we're still here, and the US hasn't defaulted. But do you feel it's different? Do you feel their time is going to come?
Uh, no, I don't. I don't think that we're going to have a formal default. I also don't think that the US dollar will do poorly in relative terms, which is to say against other fiat currencies. But I think the US dollar will do poorly in absolute terms. In the decade of the 70s, when the US was paying off its internal and external debts around the war in Vietnam, which of course we lost, and the war on poverty, which we lost, um, the answer to that, the answer to maintaining the level of public expenditure and political expedience was to devalue the US dollar, to reduce the purchasing power of the US dollar. According to David Stockman, the Office of Management Budget, the US dollar lost 75% of its purchasing power over 10 years, which meant that while the nominal level of our obligations remained the same, the net present value, the real value of our obligations, declined by 3/4.
Sure.
I believe past is prologue. I believe over the next 10 years that the purchasing power of the US dollar in US dollar terms will decline by 75%.
Okay.
It's worthy to note that during that same decade, the 1970s, the gold price ran 30-fold.
Sure.
I'm not suggesting that the gold price is going to run 30-fold, but I wouldn't be surprised at all if the price of gold in nominal terms didn't mirror the decline in purchasing power of the US dollar.
Sure. Yeah. So really, what you're saying is it's a decline in purchasing power. So your average person is going to be just squeezed more and more. Things are just going to become more and more expensive.
I think that's right. And I think that I think globally, but particularly in America, the
Mm.
perception of inflation has been governed by 4 decades from 1982 to 2022, when inflation was less of a problem. You said earlier in this interview that we sort of stumble through and we get along. And that lulls us, I think, into a sense of insecurity.
Mm.
Again, in U.S. terms, and I understand that that you're a British interviewer, but I have to speak in U.S. terms because I've
Sure.
studied U.S. stats. In 1982, at the beginning of this magnificent, epoch, debt to GDP was at about 90%. Today, debt to GDP is at 120%. So it isn't just the aggregate number of the debt, but rather the amount of debt relative to the economy that has to service the debt. More troubling are the off-balance sheet liabilities, the net present value of entitlement promises. I guess the icon for that is me, an old guy, Medicare, Medicaid, Social Security. The net present value of unfunded entitlement obligations, according to the Congressional Budget Office, exceeds $100 trillion, or
Mm.
3.5 times gross domestic product.
Mm.
The sum of the on-balance sheet deficit and the off-balance sheet deficit according to the Congressional Budget Office, is between $4 and $4.5 trillion a year. That number is very interesting because gross federal income, all of the money the federal government collects before it spends a dime, is only $5 trillion. So now you begin to see the problem.
Yeah, absolutely.
$130 trillion in aggregate liabilities, a $5 trillion federal income, and a $4.5 trillion combined federal deficit.
Mm-hmm.
By the way, I'll give you one more scary number. The Internal Revenue Service believes that the aggregate net worth, private net worth of American citizens is $141 trillion. So if we're worth 141 and we owe at the federal level before state, local, private, and corporate debt 130, the net for reinvestment in living is $11 trillion. And the other two numbers grow by between 4 and 4.5 trillion a year. My belief is the only way out of that is a good, honest default, which won't happen, or a dishonest default by way of reducing the purchasing power and hence the true cost of servicing the obligations.
So, yeah, reduce the purchasing power to effectively inflate away the liability. I mean, so rather than a default, would you call it like a bit of a reset?
Well, a gradual reset.
Yeah, a gradual reset. Okay.
Yeah. When people talk about resets to sell newsletters, what they're talking about is the overnight bankruptcy of the United States and all that. That's all horse pucky. I think what we're going to see is going to resemble very closely in that regard the decade of the 70s. Okay. An old codger like Rick Rule will continue to get his $4,000 a month or whatever they give me for Social Security. I don't know what it is. But 10 years from now, it'll buy $1,000 worth of goods and services. I watched that happen in the decade of the 70s. By the way, I mentioned earlier that Americans are conditioned to think of not to worry about inflation as a consequence of the last 40 years. It's worthy to note that most Americans conflate inflation with the Consumer Price Index. The Consumer Price Index is not a cost of living index. It's hedonistically adjusted, as an example, which means that the government tells you what the stuff that you buy is worth. It doesn't matter what you paid for it. It also doesn't include tax. If you can imagine a cost of living index that doesn't include tax, well, you live in some country that I don't live in. My suspicion is that the deterioration in the purchasing power of the US dollar is proceeding along at a 7.5 or 8% clip, rather than the 2.6% suggested by the CPI.
Yeah, okay. So a gradual reset. I think I would tend to agree with that. So you want to really, as an individual, protect yourself from a lack of purchasing power, which the obvious thing is should be gold, because that is usually a hedge against inflation. But I guess also picking commodities and stocks that you believe will get scarcer and stocks that will go up in value, and you can hedge that way.
Well, certainly if you look at the stocks that worked in the decade of the 70s, I mean, gold definitely worked. But it's interesting that you had a bear market in equities from 1968 to 1982. And there were people like Warren Buffett that generated 25% compound internal rates of return for those 14 years. So there was relief in the stock market. Companies that have pricing power, companies whose products generate so much utility to their customers, and have competitive moats around their business so that they can raise prices to match inflation. Companies in extremely capital-intensive businesses where they have a lot of property, plant, and equipment that if somebody wanted to compete with them, they would have to spend inflated dollars to reduce. If you think back to the themes that worked in the decade of the 70s, you will have some sense of how you survive the upcoming decade, I would suggest. I would suggest, too, that simply planning your life, there are a lot of Americans, and I suspect a lot of Brits, who believe that their pension, given that it's sufficient to stand their lifestyle now, will stand their lifestyle 10 years from now. And that's unlikely to be true. People need to alter their retirement plans. Now, a funny thing to say from me, who totally failed retirement, irrespective of economic pressure. I just love to work.
Sure.
But there are people who sort of believe that they're entitled to retire at 60 or 65, and who believe that society owes them another 30 years. And society's broke. The money to pay it is not there. And people need to confront that, and they need to make plans for how they get through the next 10 years that don't include 100% reliance on government.
And that means either working longer, presumably, or working harder, or indeed financially planning for that.
Saving more,
Yeah.
spending less. The old-fashioned stuff that, well, maybe not your generation, but my generation was taught to do but forgot about.
Right, yeah, exactly. Well, I mean, that's an important part, though, isn't it? I mean, I don't think people are really taught good economics or finance. I mean, I'd like to understand what your feeling is on the ground in North America, because I can only talk about really the UK and Europe, where I live, but it's definitely more so in the UK. The feeling, I think, is certainly among young people. I think we have a bit of a problem with young people not being as work willing as perhaps generations before them. But there's also, I think, a sense of we'll never get ahead. We will never buy a house. The country is collapsing. The rich have all the money. What's the point? And there's a very much a doom kind of feeling around that seems to be self-perpetuating. I've even seen, some very influential people online on the television channels repeating that message while at the same time being advocates against that situation. And I kind of think, well, that doesn't really work, because you're just emphasizing and regurgitating the doom and gloom. I think there are opportunities for everyone, and you can be entrepreneurial. But I mean, is it a similar thing in the United States? I see that's what it's like in the UK, and there's a lot of debt amongst young people as well.
Uh, Less in the United States,
Really?
but very prevalent. The United States is still a place that's skilled labor short.
Okay.
There are jobs begging in the little community that I live in northwestern Washington. There's such a labor shortage that people start bagging groceries at Safeway at $20 an hour. The minimum wage, which is $7.50, is irrelevant in this labor market.
Okay.
There is a young man who is able to do stuff for me that I'm no longer physically capable of doing. As an example, power washing my decks and stuff like that. This young man is 22 or 23 years of age. He has a pickup truck, he has a helper, and he has a water blaster.
Okay.
Making $160,000 a year. He owns a house and he just bought a second rental. Uh, People who don't have skills or who don't have moxie are in real trouble now. More and more people who used to trade sweat for a living and have no particular skill set nor the drive to get ahead by purchasing a water blaster and a used pickup truck are in real trouble. Real trouble. And it's going to get worse.
Yeah.
People who have skills, people who are needed in Silicon Valley, that may change a bit with artificial intelligence.
Yeah.
Who have construction skills and are willing to employ those skills. This is still a skilled labor short economy, and
Okay.
it's an economy that is seeing very rapid wage inflation as a consequence of demand pull rather than cost push.
Mm-hmm.
What that does for people who don't have skills is devastating, truly devastating.
But if you are those people who don't have the skills, you can always get the skills. Presumably, you can go and learn the skills. You can go and learn and develop and start. I mean, is there more of an entrepreneurial attitude, would you say, in America than there is in perhaps the UK? I don't see much of that in the UK.
Well, traditionally, the best source of American entrepreneurs have been immigrants,
Mm,
occasionally illegal immigrants. And there seems to be a protectionist bent in the United States, which suggests that if we don't take in highly motivated foreigners, there will be more jobs for lazy domestics. I have never seen an economy benefit from less competition. So you, you understand something about the way I feel around
mm,
that.
mm-hmm.
But there is still, I think, an undercurrent in the United States of respect for work and success. And I think that cuts across races. I think it cuts across ages. I think that the people like Robert Reich and AOC and uh, Governor Gruesome, I think those people are noisy. And I think that they tap into an underlying frustration among some Americans. But I mean, the election of Trump tells me that there is a very different counter theme at work in the United States, and in fact, globally too. I know that through my work at Rural Investment Media, I come in contact with about 50 new people a day. And my message is decidedly libertarian. 92,000 people have asked me to communicate with them, the majority of them young, which
Okay.
tells me that there is an undercurrent of support for libertarian principles on a global basis that probably isn't reported very well by the mainstream press.
Mm-hmm. Okay. Well, maybe it's a UK thing that people feel that they can't sort of get ahead. I don't know. You don't seem to be seeing as a doom and gloomer picture is what I'm sort of picking up from the UK. But I definitely get the sense that people don't see a way ahead. But if we're
Yep.
perhaps to talk to the people who perhaps recognize that and have listened to what you've said about your purchasing power getting less and less. So in essence, it's not going to really get any easier. You know, you can't just take your money, your wages, stick them in the bank and hope for something. You know, things are constantly going up and you're not going to get the return. What can they do with their money, do you think? How should they split their, I mean, should they look to start businesses or should they split across in different investment assets? What do you think? What would be your advice to young people who are feeling
I
that
have a,
and yeah,
I have a difficult time with people who don't allocate part of their capital to gold.
sure.
I maintain an alternative ledger myself. One ledger is in US dollars. But beginning in the year 2000, I maintained an alternative ledger in gold, first as a thought experiment. Gold was cheap in 2000, and
Yeah.
I began systematically, monthly, savings in gold. And so what I began to do is track the price of various things in gold, as opposed to merely in US dollars. And that was a wonderful thought experiment. In the last 25 years, gold has increased in nominal terms by 9% compounded. So, as an example, if you look at the cost of housing in the United States, which is a political issue, and you do it in gold or silver, houses are cheap. They're
Right.
substantially cheaper than they were in 2000. Rent is cheap. Gasoline is cheap. Groceries are cheap. If you measure it in US dollars, they're all expensive. But if you measure it in the golden constant,
Sure.
things are cheap.
Yeah. Okay.
And I don't know the statistics for Great Britain, but JP Morgan Chase says that the market share of gold and precious metals related investments like stocks in the United States are about 0.5% of total savings and investment assets in the country, which is to say, if you looked at the value of all savings and investment products available, only 0.5% of portfolio allocations are to gold.
Okay.
The JP Morgan Chase notes that for the last 40 years, the mean market share is 2%. So a mere reversion to mean would result in a fourfold increase in demand for gold and precious metals related assets. I
Mm.
have a very difficult time understanding why young people with surplus capital, who are going to be on earth for a long time with a lot of up and downs, don't have a minimum of 10% of their savings in
Okay.
gold. If I'm right about the next 10 years and the purchasing power of the US dollar declines by 75% and the gold price mirrors it, that would suggest that gold prices rise fourfold. If 10% of your savings were in gold, it means that you would ameliorate a substantial amount, probably 40% of the deterioration in the rest of your portfolio.
Mm.
And that's certainly the experience that people who held gold had in the decade of the 1970s. I also think that people need to be more liquid than they've been in the past. There's a suggestion, not an unwise suggestion, that partly because of inflation, the return that you get on cash is sub zero. In the U.S., you get paid, say, 4.5% in a currency that I believe is declining in purchasing power by 7.5 or 8% compounded. So you're losing 3% a year in savings. But I do it anyway because I believe that there's a probability, not a certainty, but a probability of a crisis in confidence and a liquidity-driven event, a 2008 style event. And having cash will give me the tools and I hope the courage to take advantage of that circumstance as opposed to being taken advantage of by that circumstance.
Indeed. Well, that's really interesting. I do want to come on to that in a moment. Just briefly on gold, is it physical that you hold?
Yes.
Yeah.
Well, yes, and I commercial for Sprott. I have a large holding in the Sprott Physical Gold Trust and Physical Silver Trust.
Okay.
Part of, as an old man, gold is heavy, and I don't like having to move it into a safe deposit box and then take it out and pay the sales commissions.
Sure.
So a substantial part of my gold holdings is surrogate gold, the Sprott product, where I can buy it with a click of a mouse and sell it with a click of a mouse, and they provide the storage and security.
Yeah, okay, absolutely. And with the gold, then, if people were to allocate some of their net worth or surplus cash to gold, that obviously gold doesn't yield anything, but you're saying if you were to measure the cost, so let's say in, I don't know, 10 years' time, that gold would be worth a lot more than money that they would have just kept in the bank, or indeed if it was in the bank, potentially spent it. So then that could then be turned back into the currency and used to buy an asset like a house, for example. Is that a good kind of...
There will come a time, it happened for me in 2009, where there were other assets that were more attractive to me than the gold. And I sold some of my gold and used the money to purchase those other assets.
Okay, yeah.
And I suspect 10 years from now that gold will be in the same type of favor that it was in 1990 or in 2009 or 2010.
Okay.
And I believe, despite my advanced age, that I will switch out of some of my gold into some asset class that appears more attractive to me at that point in time. I don't know what that'll be.
Yeah, okay, absolutely. One could argue perhaps at the moment it's not housing, but maybe it would become property, because we know property is pretty expensive globally, whether it will come back down. But it's interesting you say, I don't know if you're picking 10 years as just a general number, or if that ties into what you just mentioned earlier about a bit of a liquidity crisis, 2008 style. So I want to talk about that. That's the first time I'm hearing this.
I'm old enough that it would be very difficult for you to get me to pick a specific date, specific time, or a specific. I've tried that in the past, and I'm too cagey to make that mistake again. I use 10 years because I sort of think in decade-long terms.
Okay.
It took the decade of the 70s to have the sort of reckoning that the United States needed. We needed to raise interest rates to the point where they were substantially greater than inflation to break inflation and break inflationary expectations. And we broke the price cycle. In the period 1979 to 1982, in the California market at least, residential real estate lost 50% of its price. Again, in 2008, 2009, 2010, many neighborhoods in the United States experienced 50% price declines in real estate and other assets. Very, very, very high quality common stocks sold off by 40%.
Yeah.
If you are psychologically unprepared for that and financially unprepared for that, you become a victim of that circumstance.
Yeah.
If you are prepared, you become a beneficiary of that circumstance. My best investment year in my entire career, bar none, by far, was 2009. I went into the 2008 collapse scared, cashed up, but I was prepared enough, having been an investor by then for almost 30 years, that when that liquidity-driven panic set in, I pushed the trigger and was able to buy stuff.
Right. Yeah.
And I suspect, I don't know, but I suspect that I will have the opportunity to do that again. And I hope, I hope that I have the clarity of mind to do it.
Yeah. Okay. Because you never know what it's going to look like. I mean, what's best to have in that situation? Cash and gold, or mostly cash?
Cash and gold.
Cash and gold. Okay.
Cash and gold.
Okay. Yeah.
Yeah, gold, in the aftermath of a panic, what the political forces have been trained to do is drown the world in cash.
Yeah.
And that does not make cash more valuable. It makes cash more available.
Mm.
Those are very different
Yeah.
phrases.
Absolutely.
And so I would encourage people to have both. And I would encourage people to invest in themselves in the sense that they come to understand stocks as fractional ownership in businesses. I would encourage people to understand that money is made in equities on the delta between price and value. The price information is easy to get. People pay slavish attention to it, pardon me. But it's really a floating abstraction if you don't have a sense of its value.
Yeah.
A stock is selling for £10. So what? What's it worth?
Yeah.
When people invest in themselves to the extent that they can do rudimentary securities analysis and understand what a business is worth approximately, then they have a frame of reference as to whether a security is cheap or dear. Remember, as we said earlier, that in the period 1968 to 1982, a 14-year-long bear market, Buffett, pretty good student, generated something like a 25% compound annual rate of return.
Mm.
And individual investors need to do that too. They are not going to be able to do it by speculating on momentum or by owning companies because their price goes up when the investor himself or herself doesn't understand the basics of the business.
Oh, yeah. Exactly. Yeah. I want to finish off with that in a moment, but just if I can dive a little bit more into your crisis, I'm not going to say prediction, but theory. Let's say. I mean, is it just something you think is time to happen again? Are you seeing something happening that could drive it? Do you see what it looks like, or have you no idea? You just think it's sort of due in the next few years?
Yeah, I mean, my background is I'm not a micro guy. I'm a lender. I'm a loan shark. My life revolves around math. And I have a very difficult time understanding how an economy the size of ours services a debt the size of ours. And I don't understand politically how the voters don't continue to vote for free beer and a free lunch. When those lines cross, and maybe they don't cross, but I believe they cross. When those lines cross, there's going to have to be a reckoning. I believe it's going to be not a gentle, I believe it's going to be a gradual reckoning, like the reckoning I experienced in the 1970s, a
Okay.
10-year reckoning. It'll be punctuated, I think, by one or more liquidity crises. And by the way, we'll get through it. Uh, Humankind is actually pretty resilient. I think it was Churchill that described Americans as doing the right thing when they exhausted all of the other options. I think that goes for humankind too.
Mm.
The United States itself is still a culture where 5 or 6 pimply faced kids commandeer a garage in Sunnyvale, California, and out pops Google or out
Mm.
pops Apple.
Mm.
It doesn't just make people $1 trillion in capital gains, it profoundly raises productivity
Mm.
for low capital inputs. And because of the internet, because of the distribution of information on a global basis, that garage doesn't have to be in Sunnyvale. It could be in Lagos or Jakarta or Brighton. I think over time, our individual creativity and tenacity will continue to fund successfully our collective stupidity. But I think there's a 10-year reckoning before we get
Okay.
there.
Okay. Okay. So it's part of your sort of gradual reset, but you think it's prudent to hold a fair bit of cash just for
Yep.
the odd
Yep.
kind of spike that would come
Yep.
down. Yeah. Okay. Okay.
In general market securities, I buy businesses I understand. I understand banks, so I own some well-run banks. I understand insurance, so I own some well-run property and casualty insurers. I don't understand the general market, but Buffett does. So I own Berkshire Hathaway. I'll have to have my own reckoning when he sheds his mortal coil. He's 92 or 93 or something. And I own an ETF called the Dividend Aristocrats. It's made up of companies who have met or exceeded their dividend guidance every quarter for 30 years.
Okay.
Companies with pricing power, companies with margins and companies that are kind enough that they return part of that margin to their owners by way of dividends. I looked at what worked for Buffett in the 14 years, the bear market of my youth, and I learned some lessons. And I would urge young people to do precisely the same thing.
Okay. Well, thank you, Rick. Thanks very much. I wonder if we can just finish off by talking about that delta between price and value. And I appreciate you don't perhaps know a couple of these UK listed stocks, but they are onshore operations in the United States. But there's a couple of stocks. You've got Buccaneer Energy, who were previously known as Nostraterra Oil and Gas. So it's an oil company. They own producing wells. I think at the moment they're worth around £1 million on London, so extremely low, almost at sort of cash shell value. And they have over £2 million in free cash flow revenue. So already, in my opinion, there's a big difference there. They are looking to acquire other oil projects. They're break even across their projects, and the oil price at around $25 US dollars per barrel. So at the moment, that's still pretty profitable. But I mean, why are some of these companies, you think, not seeing the value? I mean, for me, just looking at purely free cash flow of double what their value is, I'm not entirely sure why the market doesn't recognize it yet.
I'm not familiar with reporting requirements in Great Britain. In the United States, that company would be asked every year to publish an independent appraisal of the net present value of their producing assets.
Okay.
If you look at that document in the United States or Canada, and I don't know if it exists in Great Britain, and you compare that to the enterprise value, which is to say the market capitalization plus debt minus cash, you get a sense of what the company is actually worth. The explanation for the undervaluation, if it's undervalued, I don't know that it is because I haven't done the research, is I think pretty easy. The AIM is a very difficult market for international investors. And the London market itself is more of an institutional than a retail market. There is not much institutional support for companies under sort of 100 million sterling.
Yeah.
The second thing is that, and this is classic with international listings, a London listing is unlikely to attract American attention, but the assets are in the United States. The British investor might be more interested in British oil and gas than U.S. oil and gas. We see this dichotomy a lot with Australian-listed companies active in Africa, as an example, AIM-listed companies active outside Great Britain. This so-called, we call it stranded asset syndrome, is a very common circumstance. And if you're a patient investor and you have faith in the management team, if you believe that they'll be able to address their cost of capital, buying these stranded assets and allowing the time value arbitrage to work itself out has been a great strategy.
I will look into the net present value. I think there is one for that company because they do have a lending facility and that bank is doing an appraisal on that. So I'll look into that and maybe if I can send you some information, maybe next time we speak, we can maybe talk a bit more about that.
Happy to look at it. The oil business is where I grew up. It's where I cut my teeth. I learned resource finance and learned geology in the oil side and then took it to the mining side. But even today, I have more of my own assets invested in the oil and gas business than I do in the mining business.
Okay. Well, on just that same theme, oil and gas, Helium is another undervalued, in my opinion, again, London listed company. Now, it is on what's known as the Aquis Exchange, which is even more illiquid than, you're familiar with that. Yeah. So they are they are looking to move over to the main market. But again, so they're in the Hugoton area. They've got some operating wells in Hugoton, and they're not so far away. They've got a new well there. Actually, it's already drilled. The water well has been given its license, so they're looking to turn that on, pump the water, disposal of the water into that disposal well, and start producing helium. So they're very on the edge of the gas field, so it's a little bit more challenging, but they're very confident that they can start getting some good gas flow out of that. So again, I think that company's only worth $1 million or $2 million, about to get into helium production. And Again, I don't see the market recognizing the potential, or maybe it's waiting for the numbers to indeed start to flow. But I know you're fairly familiar with the Hugoton area and that kind of helium in Kansas, so I'm kind of keen to know your thoughts on that, because it's really a producing site for a long time, isn't it, with many more years to go?
I'm quite attracted to helium because of its technological applications. When I look at commodities that my friends in Silicon Valley ask me about, I would say that helium is among the top five, and
Okay.
most can't spell it. So that's very useful. I don't like competition in my investments, and there's no competition in the helium market. People couldn't care less, which means I love it. The Hugoton I'm very familiar with. It's the up-dip extension of the Anadarko Basin, one of the very, very, very great gas fields of the world. And the shallower stretches of the Anadarko Basin, particularly the Hugoton embayment, particularly the western part, the Dorchester Hugoton, is very rich in helium. When we used to drill natural gas wells out there in the 1970s, we had to dispose of the helium. Uh, and it was actually a cost. The other part of what you say is true. This will be fairly high cost production because the fringes of the Hugoton have a lot of salt water in it.
Yeah.
And with most gas wells, you fracture the horizon that the gas is in, and you don't pump, pardon me, you allow the gas, which is less dense than the water, to desorb from the underlying rock. You maintain enough wellhead pressure that you don't produce water. In the Hugoton, there's so much water relative to the contained gas in the fringes of the embayment that you can't do that. You have to move the water to move the gas, and you have to manage the well extremely well so that you maintain enough of a gas cap, a gas bubble, that the water doesn't completely come in and do what's called coning it. So you're going to have to operate that helium well, uh, helium being less dense than gas and substantially less dense than water. You're going to have to operate that well in a very, very, very tricky fashion. If you're able to do that, the helium reserves, both in the Hugoton and up in the shallower stretch in Saskatchewan, uh, world class helium.
World-class helium. Okay, but it's about managing that well. But okay, that's interesting. Right. Well, thank you. That's something I've learned. I will put that to the CEO when I speak to him about how they plan on managing that well, as you've just pointed out. Well,
And if as a Brit you're given to gun sports,
I am.
uh, the Hugoton is some of the very, very, very finest pheasant hunting
No.
in the world. So if you had the opportunity to visit it, uh,
Again,
uh,
I didn't know that. I have been to Kansas, but and I did shoot guns with an American family, but it
right,
was just at a range, yeah. But no, I do come from a hunting background in the UK, and in Europe,
right,
I do target pistol shooting, but here in the Netherlands, the game hunting is not really a thing.
yes.
So,
Well, the Hugoton for pheasant is different. It's very, very good.
oh, excellent! I didn't know that. I shall bear that in mind if I do go and visit it. Rick, thank you so much for your time, as always.
Pleasure.
Learned a lot, and yeah, I hope we can catch up again. Yeah, maybe not too distant future, but thank you for sharing your thoughts with us today.
I look forward to it. Thank you.